Excel comes with a number of very useful templates, and one of the most useful templates is a template called loan amortization. Now this template is not unique to Excel 2010. It comes with every version of Excel. When you click on File and New and you go to Sample Templates, you'll find a template called loan amortization. And if I double click this, I can use this template to check my mortgages or to help me structure the type of mortgage I'm going to take out. Let's say, for example, I'm going to buy a house or a rental. In D5, I'll put the loan amount. Say I'm going to borrow $350,000. So that's what I enter. Then we enter the interest rate. Let's say we're going to have an interest rate of 5.74. So I enter 5.74. Let's say in D7 that I take it out for the maximum term of 30 years. Now this is the crucial bit. In D8 is the number of payments you're going to make a year. Most banks will encourage you to make a payment once a month. So let's put 12 payments a year once a month. And let's say, though it doesn't really matter, that I'm going to start this loan repayment on the 1st of the 1st, 2014. Now as soon as I press enter, my loan is calculated. I can see how much I'm paying a month is basically just over $2,000. But the shocking part is the interest. The interest I'm paying when I borrow $350,000 is on top of the $350,000. I'm paying $300 over $384,000 in interest. So I'm actually paying more in interest than the amount I'm borrowing. And that is because of the number of payments I'm making per year. When you take out a mortgage, you can pay weekly. And so I'm going to change this 12 payments a year to weekly, which is 52 payments a year. When I change it to 52, as soon as I press enter, you're going to see the interest drop. The amount that you pay remains the same, it's just that you're paying it weekly instead of monthly. So instead of $2,000 once a month, you'll be paying roughly $500 a week. But as soon as I press enter, the $384,500 drops to $172 and roughly a half. So I've just saved you over $200,000 in interest simply by paying the same amount but weekly instead of monthly. With most mortgages, there are a lot of things you can't change, but I'm pretty sure that with most mortgages you can change the frequency to which you pay your mortgage. So if you're paying monthly or you're considering to pay monthly, don't. Pay weekly. The reason is the interest rate is calculated on the outstanding balance. And if you're paying weekly, your balance is dropping each week. And over 30 years, that makes a big difference. But if you're only paying once a month, then your balance is dropping every 4 weeks. And it's not dropping at a rate fast enough to bring the interest rate down. So definitely consider paying your mortgage or your bills off more frequently than monthly. I've just spoken to one client who's just gone back to the bank and changed it to weekly and shaved 9 years off his mortgage. Good luck.